I have a question for you. Come here. Lean in. Do you know what your profit is doing? Or are you just guessing? If you're not tracking your profit, understanding your margins, or assessing whether your profit is growing or shrinking, you're leaving money and growth on the table. In today's episode, I'm breaking down 3 things you absolutely need to know about profit to run a healthy, thriving business. Stay tuned. Welcome to episode 22 of Harmonious Wealth. I am your host, Iyanna Vaughn, and we are talking about profit margins. I'm not sure if anyone knows, but I had a podcast called Major Margins, and because I'm just all about the margins, okay? Not that that's what I only care about, but I care about the margins because margins help you increase your cash flow, which helps you just operate in a business that is healthy. So, if you're an online coach or you're an entrepreneur, service based business owner, you're feeling like you're doing everything right, you're bringing in the revenue, you're maintaining your expenses, but somehow it's not translating to the profit that you expected. Sounds familiar? Well, today we're diving into 3 things that you need to understand about profit in your business. We'll cover the different types of profit that you should track. I teased this in episode 21. We'll help you calculate and understand profit margin percentage, and then we'll help you understand how to assess whether your profit is growing or shrinking and what to do about it. Okay. But before we're going to get into the episode, if you're experiencing fluctuating profit, I have a treat for you. So I have the Harmonious Cash Flow Planner, and it'll help you turn your profit chaos to clarity. It helps you understand not only like what's coming into your business, what's going out, but just an overall view of your cash flow and how the changes in profit impact your cash on hand. And stay tuned to the end of the episode, and I'll tell you exactly how to get your cash flow planner. Okay, different types of profit. So we talked about this in episode 21 where I shared of like your different types of expenses. And the first type of profit is your gross profit. Gross profit comes with your revenue minus your direct cost equals gross profit. It includes like everything after you have like your direct, like what your direct cost. So that can be like your subcontractor if you're a service-based business owner. It can be like your transaction fees. It can be like your shipping. It could be your cost of goods sold if you are a products-based business owner. When I look at your gross profit margin, if it's under the golden gross profit margin for me is 70%. So if it's under that, if it's like at 60, it's like, ooh. If it's at 50, I'm like, so that means to me that there's an issue with pricing and that there's an issue with like understanding the efficiencies of your subcontractors. And the next type of profit is your operating profit. So after your gross profit, we have your operating expenses, and we talked about this in episode 21 that operating expenses happen whether or not you make money in your business. That includes like your tools, your subscriptions, things of that nature, your business licenses, your phone bill, your rent. All of those different things in your business is going to happen whether or not you make money. That's your operating expense. And then finally, we have your net profit margin. That is like after your operating expenses, there's things called like your other income, which could be like your cashback income, your interest income. If you don't have one already, if you can, get a high yield savings account, get a little something with your reserves, get a little interest income. And then outside of that, we have like your other expenses that can be like your interest expense on your credit cards. We talked about how you can negotiate those rates to get a little bit lower in episode 21. It also includes like any depreciation, like all the other things that is not typical operations. It shows up in your other income, other expenses, and then it produces a net profit margin. So in episode 5, I shared with you my client, Nagina. I love her down. She shared her journey where she was perpetually at 30% profit margin. And then when we did a deep dive, we looked at her revenue sources to understand what was fluctuating. I'll talk about this more in episode 20. And we reassessed her expenses. And especially since she is a business owner that her revenue like fluctuates based on her launches, we were able to create efficiency in her profit, and she's been able to maintain 70% profit margin consistently for the past couple of years. And then whenever and specifically in episode 5, we talked about like her goal is to just like maximize her retirement contribution, and the flexibility of maintaining healthy profit margins. Now let's just kind of say not everyone is going to have a 70% profit margin, but the more that you maintain healthy profits in your business, you get to have the flexibility to execute your profit in the way that you desire. So, say, for example, if you want to maximize like your savings based off of you increasing your profit, or your reserves. So, when I think of, savings and reserves are interchangeable, but maybe it's personal savings. You want to pay yourself some extra distribution so that you can beef up your personal savings account. Or you want to just maximize your profit so that you can have reserves of 3 to 6 months of savings in your business at all times, because things happen, life happens, and you just want to be sure that you're not just operating out of desperation when those times come. So, when it comes to your profit, when you calculate all of your revenue and then all of your expenses and getting your profit, that gives us a pulse in how your business is performing and the health of your company. Okay, so this leads me to the second point of profit, and that is getting a profit margin percentage. If you know me, you know I am a percentage girly, because a percentage to me just gives me like a quick guideline, a quick pulse of what is happening in a company before really understanding like the story. I can create the story based on the profit margin percentage, but of course, I would love to dive in more. Obviously, I don't want to make assumptions. But the way that you get to a profit margin percentage is you take your net income and then you divide it by your revenue, and it creates a profit margin percentage. Do this now, please. So look at your profit in your company and then divide that by your revenue, and then you'll be able to see your profit margin percentage. If you have a bookkeeping platform like Xero, that's Xero, in QuickBooks, you'll be able to like take that like item and percentage of revenue or percentage of income, and you'll be able to see exactly what your profit margin percentage is. Now, I know I talked about Nagina's like profit margin of 70%, and that's not typical, but it's not rare for coaching businesses, because a lot of coaching businesses, you are the talent, for lack of a better word, for your company. So you don't have a lot of expenses, a lot of operating expenses. You have very near nothing direct costs. So of course you're going to have more profit in that company. And so when I think of like holistically, like other businesses across the board, and we're not talking about like brick and mortar businesses, because that's a little bit different, but we're talking about like online businesses, service-based business owners. I think a healthy profit margin is from 20 to 30%. That's like really healthy. I know that people might think that it might not be because it's a little bit lower, but trust me, when you think of like holistically, like different industries, they're bringing in 5 to 15. So if you could do 20 to 30, I think you're doing well. Even if you think that there's ways to improve, which there always is, let's just start there as like a great way. And, having a strong profit margin, right? It means your business is operating efficiently, but it does not tell the whole picture. It gives you a benchmark of like assessing your growth opportunities, whether you're able to hire, whether you're able to invest in marketing, things of that nature. And when I think of percentages, I think of like the different areas of your expenses against revenue. And then that helps you create an optimal profit margin percentage once you kind of add those things up. So, one thing you don't want to do is compare. You don't want to compare yourself to another industry that has nothing to do with you, especially if you are a service based business owner. You should not be comparing your business to a coaching practice. Please, 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 please don't do that. Please. So, really, when it comes to profit margin percentage, it's really unique to you. So, it really depends on your industry. It depends on the season of business that you're in. So, it's essential to really neutralize your profit margin percentage, really get a pulse of it, see where you are. If it's under a certain amount, see how you can improve. And if you don't know how you can improve, call your girl. Just call your girl, okay? I got you. So, the third thing in profit that you need to understand is assessing if your profit is going up or if it's going down. So, when you assess profit trends, you want to look at profit month over month, quarter over quarter, year over year, and see if you're seeing consistent growth. And is your profit shrinking during typical months where you have that like dip in revenue and then you're paying for the expenses that next month from the launch that you had the previous month, and then you feel bad about yourself because the profit went down? Don't do that. Don't, don't, don't do that. But let's say you make 500,000 a year in business and you saw a major increase from the prior year where you were at 300,000. And then you notice, while I was doing good with revenue, at a 500,000, my profit went from 50% to 30. Now, objectively, if you're just looking at the difference, that means you definitely increased your expenses more than you increased your revenue. And just, this happened to me. Something similar happened to me. And just like quick story from 2019, actually before when I started my business in 2016, I wasn't operating right for the first 3 years. I was just out here just like, anyone want some bookkeeping and just pricing low and blah 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 blah. But then when I really kind of gathered myself and I saw that it was like really detrimental to my life, my livelihood, I decided to just really take my business seriously like I would a client. And that's when I increased my income and made my first six figures in what year was that? That was in 2019, and then I doubled my revenue in 2020. I say revenue because it's really important to just know the difference, right? Because my revenue was trending up steadily every year. And then in 2021, while my revenue was the highest, my profit was dang near the same as the previous year. That was because your girl wanted to add on team members. Yeah, you get a job, you have a job, and I get a tool. This is a tool. Every client gets a tool. And then I was still working myself ragged and overworking myself to pay my team on time because when you're an entrepreneur, you pride yourself on making sure that you pay your team on time. Like that's non-negotiable. You could get paid whenever, but your team gets paid now. That's kind of how things go. So when you're assessing your profit, right, and seeing if it goes up and down, you need to just one assess, okay, after all the work that you've done, were you able to pay yourself the way that you need to? Were the things that you've invested in with your team or with like the different tools or the different professional development that you've like invested in, did that make sense in your business? So just kind of adjust accordingly if you're looking at things. Again, not to make yourself feel bad at all. This is not shameful. Even though I work with money, I had to work on my own money stuff and just really just navigate how to make sure that I am ensuring that profit is extremely important and ensuring profitability while paying myself a full salary without just neglecting myself. So if your expenses are like eating up your profit, look at ways where you can assess, identify those areas and see if you can cut back. If you can't, again, I'm not for you just like slashing expenses like Fruit Ninja. I don't need you to do that, but I need you to just really assess like, are these things working for you? Um, And then if your revenue is growing, but your profit hasn't, another thing to look at again is your pricing. Are you pricing for profit? Pricing for profit means to me that you can cover your direct costs and you can maintain your gross profit margin at 70 to 80% and higher if you are a coach because you wouldn't necessarily have direct costs. And then the reminder, like when you're kind of putting these things all together, when you're going from, okay, what is profit? Now you understand profit. And then you're like, okay, what is the profit margin percentage? And then you're figuring out if it went up or down. Just know that now that you see this, the goal isn't just to bring in more revenue, is to just maintain optimal profitability. And when you have optimal profitability, You can then maintain or increase your cash flow. You can then reinvest. You could potentially scale because everyone has a different definition of scale. And then you, most importantly, pay yourself consistently. So I shared three things: how to, like, your different types of profit, how to track your profit margin percentage, and then how you must regularly assess your profit margins or your profit overall so that you can take action. What tip was the most helpful for you today? Leave a note or leave a comment in the YouTube if you're watching this on YouTube, or send me a DM on Harmonious Wealth at Harmonious Wealth on Instagram. If you're looking for a way to optimize your cash flow and your profit, look no further than the Harmonious Cash Flow Planner, the perfect tool to track your revenue, your expenses, your profit, and your cash flow so that you can turn that chaos into clarity. Visit lovelyfinancials.com/planner or check the link in the show notes to get started today. If you're a woman growing your business and your family and you want to release the money issues or your worry about money, look no further than the Harmonious Wealth community. I want to help 100 women reach at least 1 million in net worth so that they can build generational wealth and eliminate bad generational patterns. If this aligns with you, join us in the community today.